I'll tell you what, the markets know how to walk things down right to a razor's edge, and we got down to a critical value, a critical point on SPY and QQQ, IWM. We need to take a look at all three of those as they track major indices, the S&P 500, the NASDAQ 100, and the Russell 2000 stocks. Every one of them brought down to essentially the same point, all leading up to non-farm payrolls and the unemployment rate, plus the catalyst next week of the election and the Fed meeting, along with the corporate earnings that we have. So let me show these technicals to you, and you'll see what I'm talking about when I talk about the razor's edge of things. So we're going to kick things off with SPY. And let me take down the technicals for just a moment. There we go. And just look at some of the moving averages that we have on here. First of all, this blue line from the Bollinger Bands, that's the 20-period moving average. I said it was critical to hold that for bullishness, to see that support there. That failed. Now, mind you, we're still above the 50 and the 200-day as we're looking at the daily chart here. And the red line here is a 50 EMA. Pink is that 50 SMA that we have on there. And we got brought down right to that level, taking a small amount of bounce today, as I would expect, coming off of that level. And I think we'll find out today whether or not this could be a huge rallying point, by the way, if we get good numbers for non-farm payrolls and unemployment. So we could see that appreciation up, and then we want to watch the 20-day to see if resistance gets retested and holds, or retested and broken. But the 50 is definitely that time where we could watch out another major rally come off of that one if we get favorable outcomes throughout, well, the next few catalysts that we have. So what we have for the SPY right now, tracking the S&P 500, we broke down below the 575 level. We did not make down to 566.25, but with the 50s right in there, it was going to be hard pressed to get there anyway. So we're at a bit of a teetering moment. By the time you see this, we might actually already have non-farm payrolls coming out for us and unemployment rate. Let me just say, to the downside of this, if we break the 50s that you see on here, you can expect further bearishness to the downside from that, especially if we retest them and hold them as resistance. So we fall down through the bottom, come up, hit our heads, and then get rejected and fall back down. That could signal a much further sell. However, if we just peekaboo down below them and then we end up breaking back through that resistance, well, that could be a very bullish thing, because then when we go to retest that resistance, we find out that it gets broken, and that can be bullish, especially where the 50s are involved. And so then we get to watch out for the 575, the 20, and then the prices to the upside on this, which I just realized I have those switched around. I'm going to have to switch those. These should be green because their prices to the upside. There we go. And these should be red because the prices to the downside. I will fix that in a future video. But for now, those prices that I have on there are still very good for you. So moving on from there over to the Qs, and I did the same thing here. Look at this. There's the red 50 coming up along there. Now, if I put up the simple moving averages on here, you can see we're right between, from yesterday's close, the 50 EMA up top and the 50 SMA down below. So still in bullish position down below the faster moving averages, including the 20-period moving average, which you can see with the Bollinger Bands. If I put this on here, there it is in white coming across the screen. So let me put that back down for a moment and talk about what we see with QQQ. There's the bounce that we're taking right now, down below the 5 and the 13. The RSI also crossing down below 50. Those are all bearish signs, but with the major catalysts that we have coming up, we could expect any amount of volatility come along with this, whether it's with non-farm payrolls, with the unemployment rate, with the election, with the Fed meeting. So we have to watch and see if we get that bounce now, then it's about the 20 period to the upside from that we're watching for that rejection, as it's been support for us in the past. So getting rejected off of that 20 would be significant, falling down through the 50 and getting rejected off of it as resistance, heading back down, just like what I said with SPY, is also significant for us. If I put the technicals back up on here so you can see them, you can see that we've fallen out of the rising wedge pattern. And so we could also look for any rejection off of the bottom of this trend line right here for that sort of resistance that we would get, the trend line resistance that would also signal a further sell. So we have a lot to watch out for, and we could move up bullishly, but we do so cautiously because we're still up towards the top of things. We could also tumble back down, and we can also watch that cautiously. We are at a tipping point right now with the indices, with SPY, with QQQ, tracking the indices, and then over to the Russell 2000 stocks, viewed through IWM, the ETF, tracking that index. And once again, if I take away all the lines that are on here, the 50 EMA and SMA are the pink and red lines that you see dancing right through here in the middle of your screen. Let me take that back down, click on that. There we go. So right here in the middle of the screen, 50 EMA, SMA peak down through below it, pre-market, trying to come up from the bottom side of this. So same thing that I said with SPY and QQQ. If we don't get that rejection off of those, we could sell down further. Now, the other technicals that we have for IWM, yes, a rising wedge pattern like what we saw with SPY and QQQ, but there's a few other things that are buried in here, such as this trend line that you see down through here, which is the top of a bull channel. As a matter of fact, there's another red line, which is another part of the bull channel and another part of the bull channel. The thing is, for the red lines for the bull channel, let me see if I can get a better view for you on here. There we go. You can see more of the red diagonal lines. That's where prices tend to be for a little bit and then sell back down from a decades-long bull channel that we're with IWM, with the Russell 2000 stocks. And then between red and white, we spend some of the time there, more time in between red and white, and we spend a lot of time between the two white diagonal lines that are here. And if we get down all the way down to where the green is on this, this is something that you really want to watch out for from a long-term perspective for the Russell 2000 stocks. So if I go out to the monthly chart, you can see that bullish channel coming right along here, and all the supports and resistances that are listed up here are just very near-term prices that you can see. But look what happened anytime we came down to the green. We just rocketed off that green trend line, off the bottom of this thing. And I mean, look at what we had with the pandemic, down to the 200-month moving average, and then just ripped up to prices that we haven't seen ever. And that was pretty incredible. So we're up in that red territory right now. We'll see if it turns out to be something that ends up being, fairly good for us, and we end up staying up there and we can see those all-time high prices come out, or if we tumble back down into the lower parts of that bull channel where we have the more typical values with the Russell 2000 stocks, and unemployment rate and non-farm payrolls are going to spell that out for us. So NVIDIA selling down a bit, down below the 5 and the 13. We're in between support and resistance values. 134 is actually going to be pretty significant for us, so staying up above that is a good thing. If we get rejected, we start to dangle more off of these faster moving averages, that is a bearish sign. The RSI right darn near 50, 49.18 as of yesterday's close. Today it looks like it could bounce back up. This could be a bullish day if things go well report-wise with the economic reports for NVIDIA, but then we have the moving averages to watch out to the upside, and also the resistance lines up above that, which are right around 142 is where they start, and that's about where we got the peekaboos and rejection before for NVIDIA stock. For Tesla, lots of prices here, updated prices that I have on here for support and resistance. And if we look more near term to where we're at with Tesla, we're actually right in between the 248 and 250. We want to be watching those prices. And again, you can see the 5 and the 13, the green 5, the yellow 13. We're in between them, kind of mixed signals right now with what's going on with Tesla. Still looking bullish, still up above the 50, the 200, the RSI still up above 50. But we do want to watch for where exactly we find that support. Getting back up on top of those faster moving averages is going to be critical for us. The most critical line is here in blue at 259.22. And then to wrap things up with Bitcoin, we actually got a really nice bounce so far today. We came down to 69.711, our low price yesterday, 69.591. So just peekaboo, just a little bit below that today, forming up that candle. This is a critical candle for us. Getting down below that makes it resistance again. We want to be able to close up above that and call it support so we can continue the rally going on with Bitcoin. But like I said, especially with the election coming up, a Trump won election, I think, is going to be very good for Bitcoin. Maybe we get to sell the news, maybe we don't, but then it would solidify things. It would take some of the variables out of that for Bitcoin and maybe some of the other risk assets that we see out there. Maybe just the election being over itself could be something that could be good for the markets. We're going to have to watch. So if things do happen to not go so well with the reports today, that could be confirmation of leaning, or I shouldn't say confirmation, but leaning more towards the recessionary side of things, maybe refuting the last month that we saw for non-farm payrolls, especially if we get revisions back down. Maybe even with the unemployment, we're going to have to watch and see. Russell 2000 stocks are probably going to be the first to suffer. TMF is definitely one to keep on your radar as well, as we're down near support levels, very critical support levels for TMF. I'll save that for another video, but I'll tell you what, if you want to see these technicals all before they hit YouTube, talk to me, see my buys and sells, talk to my community members. You can do that at the Discord, available through the Patreon. That link is down in the description. And if you guys want to learn to do this technical analysis yourself, you can do that using the link for Stockmo Academy. Stockmo is a close personal friend of mine, a long-term career teacher, more time than I have, 17 years in education. He's got even more than that. plus business on top of it. Developed a bread recipe trading strategy to go along with those courses. It is a top-notch trading strategy that I use myself. Some of the indicators that you see on my videos go along with that bread recipe. And I'll tell you what, the people using it, putting out tons of testimonials about just how well it works, oftentimes paying for the course in as little as one trade. And you can make it even easier using the code word DOCTOR, D-O-C-T-O-R, when you sign up. Guys, thank you for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. See you next video.